Good afternoon, everybody. Welcome to midday briefing. First on draft amending budget. Only a week after the European Commission presented a set of priority actions to be taken within the next 6 months to manage the refugee crisis, we have today made a first set of concrete proposals for 1.7 billion euros of EU funding in 2015 and 2016 in order to address the refugee crisis. Money EU heads of state and governments committed to matching just 1 week ago. The Commission is now counting on the parliaments and the Council to fast track the adoption of these measures as they committed to do last week. Just a couple of figures. You can read the details from the press release, but today's proposal involved 801 million for this year, and it will be funded in part from the new funding in form of the proposed draft amending budget for 2015. And the second set of proposals for the remaining 900 million for 2016, announced last week, will be included in the amendment to the draft budget 2016 in October this year. So the Commission is delivering very fast in this very specific and important file. We must help Member States and the citizens to deal with this humanly taken very difficult issue. Another point we discussed about was Europe 2020 strategy. We will continue to work on this issue. We have to be very specific. What do we want from long-term strategy? Whether we want to change something or whether we want to continue on the same line as we have done so far. So we had very in-depth and good discussion on this, but the Commission will come back to the issue a bit later. Then the second or the third issue I would like to brief you is about the investment plan roadshow, which I took first time outside Europe to Singapore and to China. I was quite glad to hear that many investors, for instance in Singapore, I met some representatives of sovereign wealth fund. They seem to be very well aware that the EU member states are doing structural reforms. And this was very good that they knew it, because this is something what we have been advertising everywhere, that EU will be more competitive than it was 2007, only because of reforms what the member states are doing at the moment. And it also underlined the need to push forward those reforms, because we have been, as you know, very strict with fiscal rules. But now the Commission has shifted a little bit the focus to the structural side of the economy, because we are not only dealing with deficits and debt, or other way around, the deficit and debt is too big because of weaknesses in our economy's structures. So that's why it was very good to hear from investors' side that they think that we are doing right things. Also, when we discussed about the investment plan as a whole, including project portal and single market aspect, it was very well taken. Many of those who are making concrete decisions where to invest in, they were very fascinated the project portal idea, because of course, I mean, it's quite understandable. It makes their life easier when they can find well-structured, good projects from different European countries from one website. This website should be ready by the end of the year and start in the beginning of next year. Also, the single market side was very well taken because the investors saw that Europe want to address the lack of investment by opening up market. So it is completely different medicine than someone else is using. So we are opening up market, creating more harmonized single market to the areas in which we don't have it yet. And of course, EFSI was seen very interesting tool because it could co-finance projects to which private money from outside Europe can participate. We had very productive dialogue with our Chinese colleagues in Beijing this Monday. I was accompanied by Commissioners Oettinger and Bulc. Our exchanges at the high-level economic and trade dialogue underlined that the rollout of investment plan is now well underway. China made a commitment in principle and the technical details, including the choice of appropriate investment vehicles and types of projects. We will work out in close cooperation with the Commission and the EIB. One of the concrete results of HED was that we established a working group in which Commission, Chinese authorities and the European Investment Bank is involved, and we try to figure out what is the best suitable platform or vehicle or vehicles for Chinese investors to invest in Europe. And this, we should finalize this work by the end of the year. Like other international partners, China can play an important role in the investment plan for Europe. And investment from China into EU is already growing very rapidly and reached 18.18 billion euros last year. DHD agreed to put in place also or strengthen our efforts to find a bilateral trade agreement, and basically it means that we have to find a scope, a common space for the agreement by the end of the year. Many member states have started to build up investment platforms to pull together smaller and thematically similar projects which could get EFSI financing, and the Chinese signaled that they are especially interested in European infrastructure projects, but also SME financing could come to the picture. Final issue I want to raise is probably another big issue, what the Commission decided today, big package of Capital Markets Union. Jonathan Hill will explain the issue in detail later on, but I just would like to remind that Capital Markets Union is elementary part of the investment plan. EFSI, project portal, deepening and widening of internal market, and Capital Markets Union, even though it may sound quite technical, it's very concrete. I want to thank Jonathan for excellent job he has done, and also the other colleagues like Commissioner Jourova, Commissioner Moscovici and Commissioner Moedas, who all participated to our working group. I mean, the action plan, or the package, which Jonathan will explain a bit more later on, shows that this new structure in the Commission works very well. For instance, Vera Jourova's contribution, one of them, was that she's willing to find the ways to harmonize insolvency framework in Europe. This is very important for SMEs. Also, Commissioner Moedas plays a very significant role when helping venture capital funds to grow. One of our problems at the moment in Europe is that our venture capital funds are quite small comparing to American ones. Average size of European venture capital fund is 60 million euros, and average size of American funds is 280 million. So there is plenty of work to do, and also when looking at there are plenty of tools. For instance, Horizon 2020 tool, EFSI, and if you put all these together with properly changed in regulatory environment, you can really make a difference. And that's why I'm very happy that we can deliver fast something which have a real big impact to the market participants. We have listened very carefully feedback from private sector, and I hope that what Jonathan will propose later on will have a strong support, and this is something what I pursue. EFSI together with renewed Solvency II framework may also make a big difference in terms of infrastructure investment. So, ladies and gentlemen, this is what I wanted to say, and I'm open for your questions.
Thank you, Vice President. Let's start. Jorge was the first one to ask for the floor.
Jorge Valero, you're active. Two questions, if I may. First, on EFSI, you said that the Chinese are especially interested in infrastructure. I don't know if you could be more specific which areas. And related to this, to my knowledge, the magnitude of their contribution could be between 5 and 10 billion euros. I don't know if you could give us an estimate or an idea of how big will be this contribution. On the refugee crisis, the Commission was tasked with preparing an economic analysis of the impact of the refugee crisis. So I don't know if you could give us an update, and also on the possibility that, let's say, the flexibility built in the Stability and Growth Pact could be used. So I don't know if right now if the Commission still considers that this is a possibility.
Okay. Thank you. Our Chinese counterpart didn't want to mention any specific figure because let's take very pragmatic approach. The amount of Chinese investment depends first of all the number of good projects. Chinese are already now investing in Europe. As I said last year, the total amount of the assets in Europe was 18 billion euros. It's significant, especially the growth figure is significant, but it should be much bigger. Now, the biggest challenge and the message to member states and the private project promoters is that use the new opportunities which we can offer. For instance, advisory services in order to build up good projects, and also project portal and EFSI naturally. The second point is that we are in this working group which I mentioned. We want to figure out what is the best way to offer, or what is the best vehicle or several vehicles which we could offer to Chinese through which they could invest in European infrastructure or SMEs, instead of buying existing assets or investing in project by project basis. So it's difficult to say how much resources we can attract from Chinese part in near future, but it could be significant, taking into account the Chinese interest to invest in Europe. They want to diversify the risk and the assets, and Europe looks quite attractive in their eyes. So now it's quite technical work what we have to do in order to release Chinese resources to the European economy. On refugee crisis, first of all, it's fair to say that this will not be a temporary phenomenon. Let's hope the speed of incoming flows of people would be a bit more moderate in the future. It depends very much on the policy measures we take in the international level, but also in the European and national level. And therefore, I'd like to mention two issues which are utmost critical. The first one is that our asylum policies our immigration policies must be efficient enough in order to be fair enough. Europeans must find the systems fair because we want to help. We expect that our systems are supports our willingness of help. And it also means that we welcome people to work in Europe, but those who are seeking international protection but don't really fulfill the criteria, our system should send them back as soon as possible in order to strengthen the fairness of the system. So this is one of the issues. The second issue is that the member states or the country will be strong if its integration policies are efficient. Europe is aging at the moment, and we have to make sure that everybody who comes to Europe is capable to work and build our common future. So there are excellent examples of good practices in various member states when in regard to integration practices. There are also quite badly functioning examples, and then there's a group of countries who don't have any kind of practices. So we really have to pay attention to integration policy at the moment. It's important for the people who we want to help and who want to come to Europe, but also it's very important for our economy and societies as a whole.
Okay, who else wants to come in? Yes, please.
Juan San Orlando from El Español. I would like to know if you discussed today at the Commission meeting the Spanish budget, and when do you expect to publish the opinion on the Spanish budget? Thank you.
Yes, we did not discuss on Spanish budget because we have very clear procedures on how to assess the national budgets. So there's a clear time frame, if I remember the date right. What was it?
It's on the 15th of October.
15th of October, when the national budget should be here in the Commission, and in November we will give our opinion. So we basically don't comment on any of those budgets before everything is clear.
Thank you. And Annika will be around to give you more detail after the press conferences today. Anybody else? Yes, please, David.
David Carretta, Radio Radicale. I will try again with the question of my colleague on a discount, let's say, on deficit for countries that manage in this moment the burden of the refugees crisis. Are you in favor of a sort of a discount for them?
First, I will not comment on any particular country. Second, we have Stability and Growth Pact, which is flexible enough already now. So all the countries must follow the principles or the rules, because it's important in order to keep our public financing in good shape. Otherwise, we cannot help refugees or our own citizens. There's always challenging situations in our economies which could trigger or which could raise the ideas that we should further flexibilize the rule base. But we have just given our communication a few months ago how to interpret all the flexibility measures we have in the existing framework.